Hello, dear students. Let us understand about savings versus investment. Again, when we need to study about managerial economics subject, under macroeconomic variables, there are so many different terms. So this is one among them, that is savings versus investment. Let us understand. So basically, these are two different, fundamental concepts in economics. It is not a new term for us. Savings, investment, all terms are, it's very common everywhere. Like where it influence individual financial stability, business growth, and national economic development. It deals with economics directly, right? Finance in this scenario, that financial stability or business growth, economic development, for all such things, this savings and investment plays a vital role. So what is savings? A portion of income that is not spent on consumption. Already we have taken certain amount for consumption, for groceries, for entertainment, for travel, whatever. Okay, so that is consumption, right? For purchasing goods or services, that is different. That is actually not spent on consumption. We are taking certain portion of income for future use. That is savings. So savings is equal to income minus consumption. We'll be getting certain income. From that income, we should reduce all the basic needs, necessities, reduce all such things, and remaining thing that is actually called as savings. It is for safety purpose, for liquidity, for precaution. Why we are taking certain savings? For precaution. Okay, we do not know what will happen in future. See the best examples like bank savings account, fixed deposit, safeties, cash reserves, all such things are savings. Next. So importance. Yes, it helps in financial security. Only if you do savings in future, whatever things happen, you are in need of finance, you can able to get from the savings. Meet emergency. Yes, meeting emergencies. Definitely we cannot assume this is what going to happen in future. No. Capital formation. Yes, only by having, if you do certain savings, in case future if you want to start a business, you'll be getting that capital using that savings, right? And then reducing all kind of financial risks. For that purpose, main thing is what? All these things. So for doing all these things, it helps in all these things, savings. That is the reason for doing savings. See, households increase savings during economic uncertainty. Uncertainty, we cannot predict the future. Such as always the best example, that is COVID-19. During that pandemic period, only if people, those who did savings, okay, they can able to somehow manage during that, COVID time. Using that savings fund, they can able to meet all their necessities. So next, investment. So investment is the use of saved funds in assets or projects. See, you want to start a business, you're just investing in some assets or some projects. The reason of investment is you're expecting some return in future. That is the reason for investment. Clear? So investment, it includes both risk as well as return. That we all know, right? If you are investing in some assets, some whatever projects or a thing, definitely it has both sides, both risk as well as return. So the best examples like equity shares, mutual funds, bonds, real estates. Okay. So importance of investment, yes, wealth creation, and then business expansion is possible, and then employment generation, technological advancement. So all these things will be achievable if you're involving in this investment. Clear? See, startups receiving venture capital investments to scale operations and innovate products. That is the main role of startups, right? Okay. And next is key differences. Yes, as we all again discuss the same thing, focus on safety. Yes, no risk, zero risk, or as no, we can say as low risk. Lower returns, short term orientation. Savings is what short term. Okay. Whereas investment focus on growth, it involves risk. We cannot say that there is no risk in investment. Definitely there is a risk. Potential returns that you're expecting from investment, and then long-term orientation. If it is, if savings is comes under short-term, definitely investment will be long-term. So both are interdependent and essential for economic balance. So basic relationship between these two things for both savings as well as investments, funds will be like a fund is the common factor, right? So higher savings leads to higher capital availability if you have, and increased investment is for the next level, that is for starting business, infra, all such things. Okay, if it is comes under macroeconomic view, if you want to say, so national savings influence investment levels, GDP, and all economic stability. All such things, we can say under the perspective of macroeconomic. Okay. Hope you all understood. Thank you.